I add myself to the stage. Hello. I hope you all are having a great start to your day. My day has been crazy. Let me just say, I have been on the phone, on interviews, doing the things, making the plans. So exciting though, you guys. I do want to give a shout out before we actually get so short. I want to give a shout out to Scott Burke. Scott Burke and I had a call earlier today. I've been a friend of Scott's for quite a while. I follow him on all social media platforms. But he has become an affiliate with Anthropic. And you guys know I'm trying to vibe code some things. So I had a call with Scott earlier today, and I was just super thankful to have his time and his knowledge and his expertise to share with me. So shout out to Scott. So welcome back though, you guys. This is another episode of Crypto News with Julie Kennis. I'm your host, Julie Kennis. As always, this show is powered by the Gokhshtein News Network and sponsored proudly by Market Cipher. You guys, I was rewatching part of my show back, and I was so excited when that little green dot on my Market Cipher line printed. So exciting. So excited. Anyway, hello. How are you, DJ and Brian? Good to see you. Hello, Mike Volmer. You're here too. John Legend, the legend. Chipper, hello. I don't think we've got a piece of my mind today, but we do have a Black Hat team. We have the Black Hat team. All set. How are you, friend? Good to see you. Good to see you. Thanks for coming in. Hello, Soul. Welcome in. Oh, Hickey's in too. We've got everybody filling in the room, filling in the romper room. Romper. Where's Brian? Where's Brian? Is it some I don't know, journey across the globe or something like that he watches? Hello, Jesse. Are you sneaking in there, Jesse? Just trying to see if I saw you or not. So yes, so today has been a great start to the day, you guys. I have an interview. I did an interview. I think I'm going to release it on Monday probably, just because I'm probably going to be a little tired coming back from the event over the weekend. So I think I'm going to air it on Monday. That will give me time to promote it. So keep an eye out for that. I'm super excited for the interview that I have coming out on Monday. But if you guys are new here, smash the subscribe because I go live every day at 1 o'clock Pacific Standard Time. I'm going to jail at 5:30. What? How do you well, that's a very specific time to go to jail. You have to report to jail? I don't know. I feel like there's a story there behind that. Hello, Ghost. How are you? Hello, Steve Hickey. Hello, everybody. Hello. So yes, I'm excited because Bitcoin, it's having a rally. And not only is it having a rally, but when it pulls back, it's not really pulling back. It's just taking these nice little breathers. So, did you have a chance to get in while things were down yesterday? Because I don't know how many more chances we're going to have to be down. Bitcoin loves 69. I keep telling you guys, that's the bottom. 69, I mean, could we have had a better bottom? Yeah, there was a better bottom. But 69 is the bottom. If it touches 69 again, just scoop some up. Also, this is not financial advice. It's never financial advice. But anyways, you guys, let's go ahead and dive into the crypto charts. Taking a look at the 1 hour here. I just realized that it was on the 1 hour. Let me go ahead and drill it in because I've been operating on the 15-minute timeline. Been liking the 15-minute timeline a little bit better because then on the Market Cipher line down here, I can kind of get an idea of where things are going though, right? So we can see here, we had some downward momentum. Money flow was in the red. We printed a couple of big green dots. Started to go up. RSI line is up. Money starting to flow into the green. So as you can see, that's where we're at right now. Money flow is in the green. RSI looking good. Bitcoin's currently trading at 74,797. 7797. 7777. I feel like an attorney commercial. They always do the attorney commercials. It's called 222 2222 222. Anyway, that's the Law Brothers, you guys. I way too much of that in my life. Let me just tell you, I'm good. Anyway, you guys, so Bitcoin is hanging on strong. It's actually looking nice. I kind of like my Bitcoin. I like my Bitcoins being a little higher. So everything is trending along with Bitcoin relatively strong, except for that nice big red candle on ETH right now. Taking a look at ETH, is currently trading at 23.64, so down just about $40 from yesterday. So we are up, having a nice little pumpy. I feel like Friday, you guys, I feel like Friday is going to be the day. And you want to know how I know? You want to know how I know things are about to pump? Because I took crypto out. Yeah, you guys, in case you didn't know, today's tax day. So don't forget to pay your taxes if you have not already. If you have not received all of your crypto tax forms, file an extension. So you don't want to not pay and then get in trouble. And you don't want to not claim your crypto and then get an audit. So it's better to just do it as accurately as possible. And if you don't have all your documents, just file an extension. Okay. Already paid. Good job, Poe. Mike Volmer says, F taxes. Dude, I live in California. Just don't. Okay. We get raped here by the homeless. I probably shouldn't use that word on any of these social media platforms. I apologize, algorithms on all of the platforms. It is just what Gavin Newsom has done to this beautiful state of California. There was a time we were a good state. All right, so Ethereum, it is up about 1.5%. But yeah, we were trading at 24 from when we had this little sell-off. Because remember, I told you guys, you're going to want to buy. Because how many more chances are we going to have to buy when it's low? And we're going to get into it. Because we're just going to talk about it. All right, take a look at Solana. Solana is also in the green on the 15-minute. We've got money flow in the green. RSI looking good. Everything here is trading at $85. Just changed to $85. All right, Chainlink, it's up about 29 cents from yesterday, because I think we were at $1 or $9.01 yesterday. So we're up about 30 cents. Okay, let's see. Sui is up about a penny. Dogecoin, it's still where Dogecoin was. So, and ADA, I should buy some. I should follow my own rules, and I should go buy some more ADA and bring my cost-based price down. Because you guys know my cost-based price is 33 cents, and I'm upside down right now. So I need to probably buy some more ADA. All right, let's go ahead. I think that's all I got there. You want to take a look at oil. Oil's down. Was it 92 yesterday? We're at 91.23. I swear gas went up by my house though. So I'm hoping that changes soon. Gold. Okay, so my interview, you guys, has to do with gold. So I'm super excited about it, because not only is it gold, but it's gold, real world assets gold. So it's a exciting conversation. So I'm excited for you guys to all hear it on Monday. So keep your eyes peeled for that. But gold's currently trading at 47.93. It was up yesterday at 4,800. So, and silver was at 80. It's dropped down back to where it was, the 79 range, which, honestly, silver at 79 seems like a decent-ish price. Like, I don't know. Whenever silver was down at like $25 an ounce, that was when I was buying my silver. Because when silver was near $25 an ounce, I was like, this is cheap silver. And that was when I started to accumulate. But then it just stayed really low for a long time. So, but yes, we'll get into all of that. All right, you guys, let's go ahead and take a look at the crypto bubbles top 100. Rave is down 24%. Jesse, did you sell the top? I hope you sold the top. Wasn't that the one you said you were in on? You got in at like 3 cents or something like that? Yeah. Was it 16? Weren't we at 16 yesterday on the live stream? So we went up to 19. We've had a pullback. He says, of course. Of course. We take some profits around here, don't we? This is probably Jesse. Jesse's over here like full clipping his bag. Yeah. Anyway, so top 100 is looking good, minus Rave, which is to be expected with the pump that it's had. So if you were shorting or you were spot and sold the top, congratulations. Dinner's on Jesse. So, all right, you guys. Jesse, what is for dinner tonight? Jesse is rich AF. He said no, not yet. You know what? And honestly, I do believe you're like in a country that should be a little more generous with your hospital bills after breaking your leg in your accident. That was awful. I think if anyone has deserved a good payout, it's Jesse. It's Jesse. All right, you guys, let's go ahead and dive into some breaking news. Poe man, I did not know that your name was Poe because you are Poe. A Poe man. All right, our great friend, Senator Elizabeth Warren, lover of all things crypto, innovator extraordinaire. Yes, she questions Elon Musk about his X money because how dare he? The Massachusetts Democrat has been critical of private companies, including non-bank entities, issuing their own dollar-pegged stablecoins. Of course, because she hates crypto. U.S. Senator Elizabeth Warren has asked Elon Musk for information on X Money, a payment feature that is expected to be integrated into the X social platform in the near future. Warren, who is a longtime critic of Musk and the cryptocurrency industry, wrote a letter on Tuesday that X Money and its potential stablecoin and crypto integrations could pose a risk to the financial system and U.S. national security. She questioned whether the platform would also issue its own stablecoin under a carve-out of the Genius Act, which allowed private companies to issue their own stablecoins. So, Poe is so Poe, he would have to make money just to be homeless. That's great. That's great. So, yeah, big surprise here. She's attacking Elon Musk and X Money. I'm excited about X Money. I'm monetized on X. It's like the only platform that I've been monetized on so far. So hint, hint, if you're watching this, please subscribe. I need all the watch hours I can get. I'm close. Okay? Just close. So just subscribe, watch a few, we'll be good. All right. It is unclear what risky investments, intrusive data monetization activities, or gimmicky other X Money or Cross River may intend to engage and pay a yield. So I can't with Elizabeth Warren. At what point can we just say that, you've been in office long enough and we're going to phase you out now. So Warren's letter could signal a pushback from U.S. lawmakers against private companies issuing stablecoins under the Genius Act, which opens the door for tech sectors like non-banks to issue U.S. dollar-pegged tokens. So I don't know why it would be an issue if companies offer a settlement layer in their native stable coin if it is backed to the US dollar or is backed with some sort of real world asset. So questions on FDIC insurance for stablecoin deposits. So Warren also asked whether potential X Money customers were aware that FDIC insurance would not protect them from if the platform failed. So I would have never even cared. Elon, Daddy Elon, I will take your money. I will take your money, Daddy Elon. If you take your money away from me, that's okay too. In March, the FDIC chair, Travis Hill, said that the stablecoin user deposits are not protected by FDIC insurance under the Genius Act. The Genius Act makes it clear that payment stablecoins are not subject to deposit insurance or guarantees by the U.S. government. However, the legislation did not expressly prohibit stablecoin deposits from receiving pass-through insurance, which extends FDIC insurance to each customer if an eligible financial institution of up to $250,000 in the event of a company failure. I mean, let's be real. Is Elon going to default on X? Is so highly unlikely. X money is what he originally wanted from back in his like 20s. Like back when he started PayPal, he wanted PayPal to be X money, and X money is now going to be what he always wanted PayPal to be. So it's literally just carrying through with his wishes, except for before he was just some young tech kid. Okay. And now he's like a freaking trillionaire and like the richest man on paper in the world. So he's not going to default and need $250,000 from the FDIC insurance. And yes, we want term limits. Hello, Toxic Wharf. Welcome in, friend. He said that even though the Genius Act lacks a hard, Hill said that even though the Genius Act lacks a hard prohibition on stablecoin companies, it extends a pass-through. So it would be inconsistent with the broader points of the regulatory framework. I just feel like that this is just, it's just a byproduct of creating this new industry and bringing the new industry in. You're bringing a new industry in, you're regulating it, you're taxing the F out of it. Right? Okay. And now, why are you fighting? He's just fighting on everything. Just fighting on everything. So this is how come I know, like, if she's pushing back against Elon Musk and whether he's going to issue his own stable coins from X money, I know for a fact she's going to try and go after Donald Trump when he's not in office anymore. Like, for all of the crypto ties and everything that he's done. All right, so let's move on to the next story because we're going to talk about that next. So Tom Lee says that the mini crypto winter is over and sees Ether above 60K. Oh my gosh. Is it cold in here? So the Bitmain chairman, Tom Lee, told Paris Blockchain Week that the recent crypto slump was a mini crypto winter and that Ether could climb above 60K over the next few years. So I like how they always say this over the next few years, because we always know that like a bull run is like 6 to 12 months. And so you say next few years. Okay, so you're talking next bull run. Okay, got it. So not this bull run, next bull run. You're gonna, okay, got it. Noted. Just like we hit 10K Ether last time, right, guys? Bitmain Immersion Technologies chairman Tom Lee said on Wednesday that a recent crypto slump was a mini crypto winter and that may already be ending, in comments that came shortly after the company disclosed a multi-billion-dollar quarter loss tied to unrealized markdown on the company's Ether holdings. During a keynote speech at Paris Blockchain Week, Lee said that the equity markets have bottomed due to the U.S.-Israeli war with Iran and that Ether will emerge from its massive consolidation driven by tokenization and agentic artificial intelligence initiatives tied to the smart contracts network. Lee argued that equities have reached their bottom and leading to a recovery from what he called an unusual crypto market downturn, which didn't coincide with the wider bear market in stocks for the first time. So equity markets bottom on bad news, and we've had a lot of bad news, he said, obviously. So he says that it's on its way to 60K, but again, we never hit 10K last time. So even if I like divided that by 2, I'll divide it by 2 again. So we're going to hit 15K this next time. Not this time. Like if we're starting the bull run now, I don't think we hit 15,000 Ether this time. It would be like next time. He is his own bull case. I don't know where he's even getting these numbers. I don't know. Anyway, let's move on because there's some other stuff that I'm excited to talk about. Yeah, because that is funny, John Legend. Like, I'm like, I can't. This is just, I can't. I'd rather read you guys an article about how ADA is going to overtake Bitcoin. I'd rather read you guys that. Okay. Wilfy proposes an unlock plan of 62 billion in tokens with long lockups and burns. A new proposal outlines multi-year lockups, opt-in token burn, as the Trump-linked DeFi platform responds to pressure over delayed liquidity access. So let's dive right into it. DeFi platform World Liberty Finance on Wednesday posted a governance proposal that would place 62.28 billion tokens locked for the next multi-year vesting schedules and introduce a potential burn for founders, team advisors, and partner allocations. Under the proposal, early supporters of locked tokens would face a 2-year cliff followed by a 2-year linear vest. Founder, team, advisor, and partner allocations would face a 2-year cliff followed by a 3-year if those were held to opt into those terms. The plan also provides a burn of up to 4.52 billion in Wilfy tokens, or 10% of the founder, team, advisor, and partner allocations. Holders who do not accept the new vesting terms would remain locked indefinitely. The move formalizes a phase to unlock approach previously signaled by the project, offering a structured release of tokens while avoiding a near-term increase in supply. It comes as the Trump-linked platform faces growing pressure from holders and broader scrutiny of its governance. So, there was the post, which we're going to get into that next. The proposal follows mounting criticism from early Wilfy buyers over prolonged lockups and limited liquidity. On April 10th, the project said it would introduce the proposal after some holders threatened legal action. Additional scrutiny emerged around the platform's governance structure and decision-making process. On Monday, Tron founder Justin Sun, who previously invested $30 million in World Liberty Finance, criticized the platform over transparency concerns, alleging that the prior governance votes were dominated by a small number of wallets that lacked meaningful participation. So that's where we're headed next in this. Justin Sun, as you guys know, famously has been a proponent of Trump and has been heavily investing in World Liberty Finance, went on this very long rant. So he says, this is world tyranny, not World Liberty Finance. Here's why. This proposal has been packaged as governance alignment signal and a long-term commitment. But strip away the packaging and what you have is one of the most absurd governance scams I have ever seen. Let me break it down. 1, vote against and get punished. Classic coercion tactic. This is not a legitimate voting exercise, not even close. The design of this proposal is a logical trap. Anyone who votes against it has their tokens locked indefinitely with no unlock path whatsoever. In other words, if you oppose this proposal, you get punished. This is just voting. This is not just voting, this is coercion. What kind of democratic process rewards agreement and imprisonment dissent? So 2, voters have been selectively frozen out. I personally hold 4% of the voting power, yet my tokens have been frozen and I am forced out of this voting process. I am not alone. A large number of holders with significant voting rights are in the same position. Meanwhile, the team controls the power to freeze tokens. They decide who can vote and who cannot. What does this mean? It means that the outcome was determined before the vote even began. This is not governance vote. This is a performance where the police have already barricaded the doors of Parliament and only let their own people inside to raise their hand. The voter pool has been purged. Only yes votes remain. The result of such a vote carries no binding force whatsoever. 3, all actual power has been seized by anonymous actors. The actual control of World Liberty Finance smart contract lies in the hands of 3 out of 5 anonymous multi-sig and single anonymous guardian EOAs that have the power to blacklist address holding Wilfy. Let me emphasize anonymous. This anonymous multi-sig can override any vote and result in execute an operation directly at the contract level. The so-called governance proposals or on-chain votes, a community discussion, are nothing but theater. Real power has never been yielded to anyone but themselves, and it is laughable that they have tried these tricks to fool the community. The bottom line is the power sits with the anonymous wallet addresses whose owners nobody knows or can verify. This is not decentralized governance. This is dictatorship wearing the mask of a decentralized autonomous organization, or DOA or DAO. The voters must identify themselves. The rulers are anonymous, worse than tyranny. So here is the most ironic part. World Liberty Finance requires every participating voter to complete identity verification, electronically sign acknowledgments, and meet compliance eligibility requirements. You want to exercise your rights? Show your face first. Who are the guardians of the multi-sig signers and hold the power of the death of the contract? Nobody was told and nobody knows. There is no transparency. So while the governed must identify themselves, the governors with absolute power are anonymous. Your voters must register, submit to scrutiny, and be vetted and dictated how to vote, while the dictators won't even show their faces. So when you were able to, as a accredited investor, remember we've got these stupid accredited investor laws, so you had to be a pre-approved accredited investor to buy in World Liberty Finance on the pre-sale at 5 cents. So if you did that, you had to submit full identification, connect your wallet, sign authorization, do all of these things. I'm pretty sure you gave them complete access to everything. So moving on. A naked violation of property rights worth billions of dollars. Let us not forget the real stakes of this proposal. This is not some trivial parameter adjustment or protocol upgrade. This vote seeks to decide the unlock schedule for billions of dollars in assets, the reallocation of governance and vesting rights, and the most extreme of all, the permanent destruction of billions of tokens. This is a naked expropriationally of the holder's property rights. In the environment where the voting against the proposal is punished, where large numbers of holders have been frozen out of voting, and where actual control rests with the anonymous wallets, using the sham vote to decide the fate of billions of dollars in assets. This is not governance. This is a sham and flies in the face of what this protocol was meant to be. No society governed by the rule of law would permit this. In traditional finance markets, any asset disposition of this scale would require rigorous regulatory review, independent broad approval, and a minority shareholder protection. Here, a few anonymous wallets get to decide everything. The permanent burning of tokens means that holders' property is irreversibly destroyed. No compensation, no recourse, no due process. This has gone far beyond the realm of so-called decentralized governance. This is a systematic violation of property rights. His conclusion. I repeat that this proposal is not governance. It is an exercise of power by the selected few who are carefully engineering to further the power consolidation and property disproportionately operation. The dissenters are punished for voting no. Opponents are frozen out. Actual control lies with anonymous wallets. Those who exercise their rights must prove their identity, while the fate of billions of dollars in assets is decided by a sham vote. This is not what decentralized finance was meant to be. Results processed under these sorts of conditions carry no legitimacy and should not have binding force and should not be recognized. I call on all wealthy holders to see this proposal for what it truly is, to voice their opposition across all public channels, and to reserve all legal rights of recourse. He opened the biggest can of worms with this because Elizabeth Warren and all of her anti-crypto clan are going to descend on this. Now you have somebody who was pro-Trump, put all of this money in. Trump froze him out of his money, so he can't even decide. He can't sell. He can't do anything. He's completely locked out. So what did he invest anyway? I want to check and see, because I thought it was some crazy number, like 30 million. Invest in. All right, let's see. Yes, 30 million in November of 2024. subsequently purchases brought a total of investment. Okay, brought his total investments to 79 million or 75 million. So yeah, he spent $30 million. I mean, and I get that, like, if you are really truly pro crypto, you are not pro what this is, because this is not like a decentralized future like we were all fighting for. This is not what we wanted. This is not what we came for. This is none of it. This is none of it. So I think that Trump has really opened himself up to something down the line. So, but anyway, that's the show for today, you guys. I've been on a lot of calls today. My voice is tired. My voice is tired. So yeah, he did spend a lot of money on that banana. He did. I think he spent what was it, $1 million on the banana taped to the wall. It's a banana. It's like flowers, right? It's like you got to enjoy it while it's there. Do you think he has like the dried, rotted banana like in the box still? Probably. I don't know. Anyway, that's the show for today, you guys. If you're new here, smash the subscribe. I'm trying to get to 1,500. I appreciate you all tuning in. I will be back tomorrow at 1 o'clock Pacific time. Again, back with Joxie, 10 a.m. on Friday. And then we've got the fun stuff this weekend with people. And then keep an eye out on Monday. I've got that big interview. So I can't wait. Keep you all in the loop. Talk to you soon. Bye-bye.